Cool. So, yep. Once again, if you we'll go through a bit of a Q&A if you guys have got any questions, and I can cover off and hopefully answer most of those questions for you. If for whatever reason I can't, I'll endeavor to find out and get back to you guys with a response. And from there, we'll just go into a bit of a market scan. We'll look at some charts. We'll go through the main ones. We'll go through Bitcoin, Ethereum, have a little look at the DXY, the US 500. And from there, you guys are free to take yourself off mute if you want some particular assets looked at. Otherwise, you can just post in the chat and we'll go through them. I can see we got one in there already. But yeah, just kick it off. Is there anything you guys have been thinking on, something you don't quite understand that you maybe need a little bit of clarity on? Take yourself off mute if you've got any questions. Surely somebody's got a question, something that they're not quite sure on, whether it's to do with trading view or something to do with the market. I know somebody was asking in one of the group chats earlier today. They wanted to get a little bit of clarity on the FOMC meeting next week. Is that something you guys want me to cover?
Yeah, absolutely.
Okay. Let me just adjust my screen again. Oh, all right. Here we go. So it'll be relative to your time zone, of course, but the FOMC meeting is on for New Zealand. It's on Thursday, and their funds rate and their press conference will go from 7 a.m. New Zealand Standard Time to about 7:30 a.m. So for those of you that don't know, obviously well, not obviously, but FOMC stands for Federal Open Market Committee, and they're responsible for basically setting the monetary policy for the country and implementing those policies. So their goal is to achieve their dual mandate for promoting maximum employment and stable prices. So I'm just going to go and share my screen with you.
Yeah, what's the oh yeah, that's exactly what I was looking for, was Forex Factory.
Forex
That's
Factory. Yeah, I figured I
so
figured that question was going to get asked, so I thought I'd bring it up for everyone.
yeah, so how a lot of that's projected pretty far in the future. And if there's an update for an emergency meeting, does it pop up there as well?
Uh, I'm not too sure about that actually. That's something I'll have a bit of a dig around, see if I can find any information on that, and get back to you. But this should be free to sign up. You don't have to pay a subscription fee or anything like that. You can set it relative to your particular time zone as well, and you can also filter them. So the red and the orange meetings are really the important ones, but definitely the red ones. As you can see earlier in the week, we hit our CPI month over month, and then year over year, median CPI year over year as well. So shows you Canada, US, Europe, all that sort of good stuff. Now, if you actually come over to the side here as well, so if I go into federal funds rate, so that's the big one, I can click on open detail, and the information it'll give you here is it'll give you the historical data for that particular for the funds rate. And if you see over here, usual effects, it says actual greater than forecast is good for currency. Now, as we know, good for currency means bad for crypto. So something to be aware of when that information comes out. Now, generally, retail especially gets quite emotional with their trading, and there's a lot of FOMO going on around these meeting times as well. So price will get quite volatile. So leading up to the actual meeting itself, during and after, you're going to see price fluctuate all over the place, and then depending on how that data comes out, whether it's positive or negative, will determine on which direction the price essentially goes. And also once the US market opens as well, if the US market is open, then that will have a pretty drastic effect. I think for New Zealand, US market opens at about 2:30. It's either 2:30 or 3:30. Um, but yeah, the market will generally have a sharp move in either direction to respond to that news once the stock market opens for that day. Yeah, so hopefully that sort of cleared up any of the questions you have related to the FOMC. Does anyone have any other questions? I'll just read these comments in the chat. Yeah, what you say is valid, but the last announcements we got an example good for currency, yet Bitcoin pumped and DEX remained almost static. Yeah, we've seen a bit of a decouple from the DXY relative to the Bitcoin recently. It's kind of been a little bit hard to predict. There's also been scenarios where the DXY is pumped and Bitcoin hasn't moved. With regards to the CPI data, it was fairly neutral news. It wasn't too bad because you could see what the what they were forecasting and what it actually came out at wasn't actually that much of a difference. So yeah, it didn't have, well, it pumped, but it wasn't like a what's the word I'm looking for? The actual news or the data that released itself was sort of neutral. So the market is going to react the way the market reacts. If it was positive, it would definitely be a bullish move. But yeah, the market's going to react how it reacts. Essentially, you're going to have a lot of people FOMOing into positions. And neutral can be perceived as bullish as well. Neutral news can be perceived as bullish. It just really depends. There's a lot of external factors that come into play. It's market sentiment, with retail, market makers as well, their intended direction for price. So they've already got a direction in which they want to push price, and there's a range of different factors that the market maker might push price in a certain direction. You have things like your heat maps, and they show where all the orders are sitting. And if there's a large amount of orders stacked in favor of longs or versus short or vice versa, then the market maker might push price in a certain direction to scoop up the liquidity from those orders and actually liquidate them. So yeah, the market maker's got a plan, and unfortunately retail just gets sucked into it essentially. But the best thing we can do is do our TA and try to establish which direction price is going to go based on the information provided by the charts, utilizing good risk management as well. So maybe if you're looking at entering into a new position leading into a potential news event, you might want to either reduce the amount of leverage that you're using because the price will be very volatile. Now, me personally, I don't want to enter into new positions following or leading into a news announcement. And I also don't like entering into new positions leading into a weekend either. Weekends, market makers don't trade on weekends. So most of the liquidity being thrown around over the weekend is done via a bot by BlackRock called Aladdin. Now, I'm not going to go into too much detail about that, but I suggest if you guys have a chance, go on YouTube and do a little bit of investigating and have a look at BlackRock's AI robot that essentially does their trading for them. Is the manipulation that high that we can say it's invalidated? What do you mean invalidated? Do you mean the actual news is invalidated if it's manipulated? The news's effect on the market could essentially be invalidated, yes. But yeah, manipulation is one of those things. Like a lot of people will see a sharp move of price in one direction, they'll say it's manipulation, but it's not necessarily being manipulated as such. It just, yeah, as I said, like it can come back to market sentiment and people's emotional reaction to said news. But quite often, news events, unless really really positive or really really negative, um, those particular news events will sort of be the catalyst that initiates the move that was already going to happen anyway. Um, the only time you'll see like a sharp reversal like that is obviously if the news is very negative or very positive. So generally, the charts will show the direction in which price is going to go, unless there's some sort of black swan event or clear manipulation. But you only really see those sorts of levels of manipulation in a lot of altcoins and low cap coins and things like that. It doesn't really happen in Bitcoin too much. Well, it does, but not to the extent of these pump and dump coins. If you want to call market maker intervention manipulation. Any more questions? Otherwise, we'll get into some charts and we'll start doing some.
I just have one about setting up EMAs.
Setting up EMAs. Yep.
Yeah, whatever indicator you might use, and then however you have it set up.
It's the one that I was using. It's this one. No, that's not the right one. Aha. Okay, it's this one. So the EMAs that I use is, tell me, for EMA. So the way you can set that up, like any other indicator, you come up to the top of your page and you'll see this graph with a little trend line on it. Click on that. And then you can see all the different indicators. These are the ones that I've favorited, but you can come in here and just search for it for EMA. And I think from memory, which is the one I've got, but not favorited. Better be bloody typical. No, I can't see it in there. Wonder if I can. Ace? If you want to use the EMA? Yeah.
Yeah.
Okay. So the top one that I use, the Treasury, that's one you want to get. You can bookmark that. Now, when you have it set up, what you can do is you can just double click on it and you set the length. So the ones that I like to use is the 10, the 20, the 50, and the 200 EMA. Some people like to use the 800 EMA as well, but it's up to you. Also, some people like to use the 55, but these are what I like to use: 10, 20, 50, 200. You can change the colors and everything if you want. Visibility, yeah, you don't need to mess around with the visibility, just the style and the inputs. Cool. Anything else that anyone wants to go over? Seriously, that you have seen to be working more for you, EMA or RSI or something else? RSI works very, very well to identify divergences, and it's more of a precursor to the move, whereas something like an EMA is a lagging indicator. So quite often, if the EMA shows a cross, like a bearish cross, it's a bit of a lagging indicator. So you can see we got the cross here, the bearish cross, but the move had already happened. So you've got to take that into consideration when you're using your EMAs, that they are a lagging indicator, whereas the RSI is going to be a bit of a precursor to determine potential moves before they happen. So if you see I didn't know why I had that friggin' indicator in the first place. So as you can see on Bitcoin right now, if we look at the daily, we have this. Oh, why isn't that letting me draw on there? You can see we had downward slope and we had an upward slope. So we've got a nice bearish divergence there. Big bearish divergence. Now keep in mind, bearish divergences don't always have to play out. And so sometimes you can see like this big sell-off here. It could potentially be the divergence actually playing out for this one and that peak there. So that divergence could have already played out. But yeah, we still got this big one here. Even then, you're still bearish divergence there. With regards to EMA strategies, I think Annie, I don't know if any of you people here on the call are familiar with Annie, but she's got a YouTube channel, which I'll post in the chat for you. I'm fairly certain she's got a pretty good EMA strategy on there. I think it's the one on her YouTube channel. So if you guys want to check that out and delve a little bit more into EMAs, then feel free. Which EMAs? Yep. I'll just double click on those ones again. So hang on. I need to load up the correct one again. So the ones I have are 10, 20, 50, and 200. Cool. Everyone got that? Beautiful. So um, EMA as well. Right, we'll get into some chatting then. So we're starting off with Bitcoin. What we got here? So I always start, as I stated earlier in the week. Oh, hang on, what's 708 candles? So people don't get confused. I always start off with the weekly chart because I want to get an idea of what the overall market direction is. So starting from the weekly, we come in, we find our levels of support and resistance. We've got a bit of a zone here that we're trying to break out of. We haven't closed. We can also see we've got this very nice hammer on the weekly, which is a fairly bullish sign. We've started to form higher lows and higher highs. So we're showing a change in market structure. We have yeah, this is a tricky one. I would say that my trend line would also be here. What does it look like when it's not on the log? It's probably cleaner. So I use logarithmic scale when I'm trying to establish like long-term price projections. So you can see how it looks a bit different to what it was when it was logarithmic. So you could say here we've actually broken out of that trend. Personally, if we are breaking out of trend line resistances or levels, I like to see an increase in volume and a bullish candle actually confirming that. But as you can see here, we kind of just went sideways out of it. Yeah. Oops. Rid of those. Now we want to establish where our next level of resistance is going to be. So if we're saying that this is now support, which we haven't actually back tested yet, we want to, this is essentially our resistance. Come down to the daily. We'll see how price sort of stacks up. So now there's a couple of ways you could draw this resistance, this trend line that we're sort of following up here. You could draw it like this from the top of the wicks and say that we're still within the pattern. Now, the other way I've seen it drawn already is down like that, so that we're incorporating some of the candle bodies and some of the wicks as well. And people saying that we've actually broken out of that level. Now, what I like to do instead in that scenario is actually draw with the parallel lines tool and incorporate all of those upper wicks along with the candle bodies, so that we could treat it as a zone rather than just a single line of support and resistance. Because what can often happen is you could get price if you're just drawing a singular line, and we were saying that this is the line here, this is our singular trend line. It may look like price is actually broken up, but realistically there's a zone that accounts for all the higher wicks, and then we look like we're going to break up. People get excited, they FOMO in, and then price comes back down and enters the pattern. So we want to treat it the same as we do as, because it's a level of resistance, we want to treat it the same as we do with our levels of support and resistance, our horizontal ones. So trend lines to some extent should be no different. They don't always necessarily stick to a solid line of resistance. You're going to get wicks and candles starting to close inside and outside of them. So that's how I like to draw those trend lines in that scenario. Now, what I would like to see is I want to see bullish candlestick formations start to form on the retest of this zone here. So I want to see price come down. I see bullish candlestick formations to confirm that this is now our support and that we've actually broken out of this bit of consolidation zone that we've had previously, where price has sort of just been trending through here. We want to confirm that we've actually broken that level before we look to potentially long, because this is quite a sharp move. So you see we come down, quite a sharp move, good recovery, good buying momentum. But yeah, we just need those extra confirmations before we consider going long or short. Now, failing that, if we fail to stay above this zone, this green zone here, and we fall back inside that trend line, then we want to potentially look to short. Keeping in mind that if we do go in for a short, we're going to have to target the previous highs, because price may bounce at these levels. Make sense? Yep. So from daily perspective, we're looking interesting. We're in the waiting zone. We're in the waiting room at the moment. Move to next resistance is about 8% move on Bitcoin. If it does take a bullish move, then that's should be pretty good for alts. You'll probably get a bit of a rally on alts as well. Even still, if Bitcoin continues to range sideways, you can expect alts to gain a few sats as well. We've seen good momentum from altcoins the last few days. Let's go to the 4-hour. Yeah, again, not really seeing much on the 4-hour. Check for divergences. Yeah, you've got bearish divergence again on the 4-hour. You kind of up into that overbought zone as well. You might see price start to come down to about the 50 zone on the RSI on a retracement. So as you can see here, I don't know if any of you guys caught this candle, but we had like almost $1,000 move here when this candle actually touched our zone. So touched the zone exactly, this green zone, and then instantly shot price back up and closed as a hammer. So that means that there's a stack of orders waiting at this level for people expecting price to bounce so that they can catch the next long up. So what we want to see now is this candle's obviously dumping down. We want to see how quick and sharp that recovery is. If it gets a good recovery, that could potentially show that there's a bit of strength still at that level. But ideally, we still want to wait for those bullish candlestick formations, inverted hammer followed by a bullish engulfing or a doji bullish engulfing, your morning stars, all that good stuff. Yeah, so no real trade here for Bitcoin just yet. You could maybe say that there's a bit of a channel forming here. Not much of a flag, really, though. The thing you need to be careful with your bull flags is that it'd be our flagpole there. That'd be our flagpole there. Now, with the bull flags and the bear flags, you don't want price to retrace more than 50% of the flagpole, in which case we've achieved that at the moment. So I wouldn't necessarily classify this as a bull flag, but you can see how some people would easily get that confused. So something to be aware of. We don't have any bullish divergences either forming. So yeah, it could just be a descending channel. Waiting to see where price reacts at this level. But yeah, that's Bitcoin for now. Now, something to be aware of, there is a bit of a CME gap between 28 and 29K. Now, at some stage, CME gaps eventually get filled. Now, it's just a case of whether or not we go up and fill it first, or whether we come down and eventually go back up to refill it. But yeah, they don't always have to be filled straight away. Now, you can also see that nice bearish divergence here on the 4-hour as well. So there's a lot more signals telling us that we're maybe going to get a retracement, but we still need to see how price reacts to this level. Just being mindful of all of those previous highs as we re-enter this channel. Cool. We'll move on to Ethereum. Starting on the weekly again. Now, these will be quite large zones as you go down to the smaller time frames. They'll be quite large areas. But they are the strongest areas because they are the weekly. So just do be aware of that. Demand coming out. Same thing here with Ethereum on the weekly. You got that very nice hammer. So that shows that there's a lot of strength down here. No, we didn't come all the way down. We also had a nice W formation here. So they don't actually need to be perfect W shapes like that. And ideally what we want to see with the W is we want to actually see them at the very bottom of the trend. So as you can see, we come down We're looking pretty bearish there with this evening star. But what we've done is we've actually come down and we've formed this bullish reversal pattern. So ideally, if we're looking for a move upwards, a reversal, we want the second leg or the peak of the second leg to actually be higher than the left leg. And what that does is it shows that change in market structure, which can be a precursor that the direction of price is going to change and start reversing. Now, breakout targets for a W double bottom are measured by measuring the bottom of the W to the neckline. Now you can either do this with the wicks or the candle bodies as well. And then you take that measurement and you put it from the neckline, put it upwards. So as you can see, that breakout target was met because we broke our neckline here. It's weekly. Let's got any trend lines here. So again, I'd be drawing mine like that with a little bit of a fake out there. Let's see what it looks like without the log. Yeah, log's even different again. The thing you'll find is with a lot of people when they're drawing trend lines, right? I like to see as many touches on it as possible. Now, if you're drawing it like that, I mean you do technically have your two touches. So you've got your touch here and here. But for me personally, that starts to get into a bit of the narrative fitting again, because you can see that we didn't have much of a push on the breakout and we kind of just consolidated sideways. Generally, for an actual breakout of a resistance level like that, as I said before, we want to see that increase in volume. So we want to see strong candles actually pushing out, not necessarily just consolidating sideways. Now you'll see people starting to do this sort of stuff like that, which could potentially be valid, but we don't have enough information there yet. Or they start doing that, and it kind of falls into the category of narrative fitting. It's like you're trying to make those trend lines work when they don't necessarily work. So if they don't work, I just leave them out. But yeah, ideally you want to get as many touches as possible. For me personally, I'd say a minimum of 3. Let's go to the daily. That. You can see we consolidated within that range for a bit between those weekly resistance and support levels. And then we dipped in for a massive, now this just inform you guys, this here is a very, very typical sort of consolidation period where the market maker pushes price out in a certain direction, fake out before actually going in the intended direction. This is quite a typical move by the market makers. So something to be mindful. If you do start to see a consolidation like that, just be mindful that that can happen. We're kind of trading within that zone again. You could say we've got a bit of a resistance level there. Ethereum. Now you notice how I have these all saved as templates as well, so I can put these lines in, and I know that no matter what time frame or in how far I zoom in, that's a weekly resistance level. Sorry, daily. It should be daily. What am I doing? Daily resistance. Yeah, so we're just looking at price. It looks like it's rejecting a little bit there for our, yeah, we're falling below. We've got bearish divergence again. We've got RSI sloping down, price sloping upwards. So yeah, it's looking like we might get a bit of a pullback here. Now keep in mind, even though I'm starting on the weekly, right, and I'm putting in these big zones, these are just what you want to be aware of. Um, if you're coming down to trade the lower time frame, say down to the 4 hour, maybe even down to like do some scalping and things like that. If you find that they're actually interfering with your chart and it's maybe not a, like if price action falls somewhere in between those levels, like some say somewhere in here, and it's not going to be in the range that you're trading, you can actually just hide them instead of deleting them. So you just click hide. And then what will happen is those will appear down here in the bottom right in your object tree, and you can reactivate them here. So I like to try and keep my charts as clean as possible. Personally, I hate looking at a chart where everything's really, really cluttered. So you'll find that I try and keep everything like relatively clean. If there's too much noise going on, it's going to affect your ability to decipher the chart or analyze the chart because there's too many stimulating colors on the screen. That's why I also don't like using too many indicators as well. So I always double click just to hide those when I'm not using them. What have we got on the right now? Yeah. You could see that this is a bit of a double top. Not an ideal double top because the second peak is higher than the first, but still a double top. Breakout target there to there. It's already been met. So yeah, that could have been a, we have any divergence? Yes, we did. We had bearish divergence. So some people, that could have been a bit of an indication to maybe get out of a long or to potentially look for a shorting opportunity. What else we got? Is there any other coins? I've done Bitcoin and Ethereum. Is there any coins that we want to have looked at? Oh, there was one in the chat, wasn't there? What was it? Oh, Ajax. Uh, you want Binance or OKX chart? You on OKX? Binance. Futures. All right, let's have a look at this one. What do we got? Been ripping. Oh, this is a new listing, is it? Okay, so the weekly is not going to tell us anything because it's only just recently been listed on beginning of or mid-Feb. So daily, not really going to tell you much. However, daily does show a bit of a morning star there. Those nice bullish candle there in the middle. It is likely, usually following a morning star, if I'm looking to enter, I like to sort of wait for about a 50% retracement of the bullish engulfing candle to look for an entry because often after a morning star pattern, you can get a retracement candle. So I look to sort of target my entries sort of within that 50% retracement zone. And if I don't get it, then I don't get it. I'll just wait for another entry.
And Matt, if you do AGIX BTC, because
Yeah.
they've just on Binance, they've just actually started doing AGIX USDT. It only just started. That's why the candles only go that far back.
Oh,
If you
okay.
do BTC, you should get a more. You should get because it's been around for a while. It's just been not doing much.
Yeah. So looking at the Bitcoin pairs is a good idea as well. So that's a pretty good point. Uh, you want to look at the USDT pair and the Bitcoin pair because that's going to give you more confirmation as to the intended direction. So if the BTC pair looks bullish, then quite likely the USDT pair could be bullish as well. Now, people might say Morningstar here. Ideally, we would like to see that at the bottom of the trend. You could say that this is a bit of a retracement, so that is the bottom of the trend. However, why am I on the 4-day? Ignore that. Weekly. Cool. So weekly, we've got a bit of a zone there. Support. You've got price sort of holding there. Might run some fibs on this as well. Go from that high to the low. Yeah, so we're rejecting on the 1618 fib at the moment. So what I did here is I took it from the high and then I took it to the low retracement level. And the reason I did it that way is because I want to get our price target projections. So as you can see, prices respected those fib levels here on the weekly. So you've got the 50, broke it, tested as support, and broke up through the rest of the fib levels, absolutely smashed them. But yeah, now we're rejecting off the 1618. Now, when we're looking at, right now we're testing all-time highs. So when we're looking to establish how far price may go up, that's where our fib retracement levels can actually come in handy because we don't have any historical data, previous levels of support and resistance to actually go off to tell us where price is going to go. So our fib retracement levels are our best way of being able to potentially look for those reversal points or entry points on the reversals as well. So you can see we've got a lot of wicks to the upside here, which means that potentially buyers are starting to get exhausted. You could potentially look at this as an Elliott wave formation starting to take shape. So you might be able to say that we have another leg up sort of brewing. Personally, I don't use Elliott waves. It's not part of my strategy, so I don't use it. We will put a full zone here as well.
It's actually looking bullish, isn't it? Really?
Yeah, it is. So like I said, you could potentially look at it as Elliott wave formation. So you could have wave 1, 2, 3, 4, and then your fifth wave. Now on your retracements, you usually have an ABC correction. A, B, C. Oops. Erase that. So yeah, we could potentially get a bit of a break here. You've almost got another I love patterns within patterns. You've got a bit of a horizontal here start to form. You've got
It's gonna be out soon, isn't it?
yeah, well, you've got this inverted hammer followed by this bullish engulfing and retracing on here. So that's particularly bullish off this trend line, if this trend line is valid. Yeah, you're trending through the symmetrical triangle at the moment.
Yeah.
I would wait though. I would wait for further confirmation. I wouldn't be, because we've got those resistance levels above. We've got this red line here, which is our 6180, and then we've got this zone up here. So your levels of resistance are here, here, and here on the 4 hour. So they're the previous highs. And there's also another one here where that zone starts, that red zone starts. So something to be mindful of. Some people might want to perhaps jump in here, but you need to be aware that, you know, if we do break out of this pattern, how far are we going to go before we sort of run into resistance? So it's not an ideal entry point. Where is it? Because you'd be setting your targets probably for the top of this pattern here, but you might only get to here before you run into resistance, you know? You might reject off the 618. So you need to be relatively conservative of your targets initially and be aware of the resistance that's above you. So the ideal entry point, slightly more risky entry point for this big, if this is a big bull flag forming, the ideal entry point is you actually want to get it down here on this trend line. Now, you might not even make it all the way down the trend line. It might bounce here, or it might bounce here. But something to be mindful of. My ideal entry is definitely down on this lower trend line. But if I miss that, or if I don't get it, then my next entry is breakout, retest, and then catch the next move up. So that breakout, we want to see strong volume on the break, followed by retest, bullish candlestick formations, and then catch the next move. But yeah, we are at a level of resistance, strong level of resistance, but we are starting to form a potential bullish patterns as well. If I go back to the daily for a second, I'm going to measure the flagpole. So I get a break there. Say that that's sure. Now, usually if I'm setting my breakout targets for breakout patterns like this, the first thing I'll do is I'll actually look left to see where that level lines up with. Does it line up with any other previous price action?
Oh, right. It's the all-time high.
That's that there. That's your all-time high.
Really broken out, isn't it?
Yeah. So unfortunately, we don't have that previous price data to gauge a level of confluence from. So we can only sort of use the fibs to help gauge us. Now, from an Elliott Waves point of view, it does look like it can keep going. We did consolidate in this range for a bit. So there's a lot of accumulation going on there. And now you've sort of got a springboard effect. You're creating new market structure. You've got higher highs, higher lows. You've broken the previous high and you're starting to move up the stairs now. You're creating those new market structures. So yeah, really all it is now is to just sit and wait for a good entry point. And that'll be relative to your risk tolerance and your trade plan. Riskier entry is obviously entering within the pattern on the lower time frame for the long. If you're going to short, you want to short at resistance. But otherwise, yeah, just wait for that breakout, retest confirmation of the move that it's going to happen, and that's your safest entry point.
That's awesome, Matt. Thank you.
Yeah, no worries. Also, just keep in mind, as I said, if this is a bit of a bull flag or a bullish pennant, we don't want price to retrace more than 50% of this flagpole. Otherwise, it invalidates that.
Yeah.
But yeah,
Awesome.
that's good. I'll just go back to the USDT just to see what that's doing. Yeah, so you have got the daily, you've created that new high. So now you've just got to put in your higher low, another higher low. You've got bearish divergence, which might already be playing out. Yeah. Let's just do this on 4 hour. So there. Got the zone there as well. Got a trend line, which is broken. You could draw it like that, potentially, as well. But you've got more touches if you're doing it this way. And so you've got a nice volume candle that's pushed out. Yeah, wait and see. And see how price reacts. What else we got? Litecoin. I already have them here.
Everything's pretty much following Bitcoin mod at this moment, though, anyway, isn't it, really? This has been.
Yeah, yeah. The dominance on Bitcoin's quite high. So whatever Bitcoin's going to do, the alts are going to follow. What have we got here? Litecoin. Oops. That whole thing's its own. Still within there. Nice. Got some divergences. So you've got a bit of a daily support level there. Nice. Yeah, wait and see. And see how price reacts. Price reacts. Yeah, wait and see. And see how price reacts. So you've got a bit of a daily support level there. Nice. So you've got a bit of a daily support level there. So you've got a bit of a daily support level there. So you've got a bit of a daily support level there. which we bounced off. What I want to do is I want to get my fibs on there. Retracement. Testing the 50 fib at the moment. As you can see up here, we've got M formation, the reversal pattern. The neckline lines up with the 6180 neckline, which we broke, retested, and then came down. So what I'll be watching for is potential rejection at that 6180 zone. We might get a bit of a wick up there and then come straight back down into this zone. If that does happen, yeah, then expect to short it down again. We could potentially have a bit of a rising wedge there as well. Do we have... There's no divergence. I like to adjust my trend lines as I come down the time frames as well to get them a little bit more accurate. Now, if price breaks in and out of these, it might potentially invalidate that as a valid trend line. Instead, you could just be say maybe that top one's invalid, and that we've just got like a bit of a sort of prices coming up here, and there's your resistance within that zone. But at the moment, what I'm seeing is another change in market structure. Yeah, a lot of just sitting and waiting for these opportunities. So this is where you'd start to set your alerts. You might set an alert on this trend line, say add alert, crossing down once per bar close. You want price to actually close out of that trend line relative to the time frame that you're actually trading on. So if you're trading on the 4 hour, you want to get a candle close on the 4 hour outside of that zone, and then potentially wait for that retest to come up. So catch the short down. Now, you may or may not get the retest. If you don't get the retest, then you've missed the opportunity. So you just wait for another opportunity. There's no point trying to FOMO in, and then you can just set it Litecoin, broken, trend line. Oops. Trend line support. And then that should send an alert to your phone as long as you're in notification set up. So notify an app, show pop up, and place out. And that'll send an alert to my phone. I'll get the alert on my phone. It's going to tell me Litecoin's broken the trend line support. I can look at it and go, okay, cool. Now I want to start looking for entry opportunities so that I can potentially short that down. Yeah, we have got a bit of a strong support resistance up here, as you can see price testing, and then we had a sharp sell-off, sharp rejection there. We've rejected again. Ideally, my ideal entry is if price actually comes up and revisits these levels again, and we actually get a bit of a wick up to sort of either test this zone or the 6180, that's probably where I'll look for another short. And you'd look for these sorts of formations at that level to confirm that you're going to get that rejection. Yeah, that's Litecoin. Anyone else got any coins they want to have a look at? Matic. Yep, we can do Matic. No, actually, could I have saving here? Let's have a look. Oh, I do too. Awesome. I came pre-prepared. So we must have already charted this up earlier in the week. What have I got here? Yeah, similar pattern. Similar pattern, but we are starting to break levels of a resistance as well. But yeah, we are forming that similar pattern. We have had a very good recovery off this panel here. Like a lot of the weeklies, we got that nice hammer, which shows good strength straight off the trend line. And we are currently sitting above what was previously a resistance level because we struggled to get above there. Here, so you can see prices bounce, resistance there. We had a bit of a fake out here and then come back into the pattern. But now we've broken out and we're retesting. So although rising wedges are typically bearish patterns, we are still creating new market structure, higher highs and higher lows, and we are starting to break through key levels of resistance as well. So at the moment, we just want to monitor it, see how price reacts to these fib levels, and then once price approaches the top of this trend line, if it matches up as a level of confluence, so you might have price start to trend up to maybe like the 50 and the trend line, and then start to reject. You're looking for those bearish candlestick formations. You're looking for M reversal patterns. So you want to see something like that off the trend line or a nice inverted hammer. If it does that off the trend line and that trend line also matches up with one of these key fib levels, then that's going to be an even stronger move. So that's kind of what we're waiting for. But at the moment, we are producing that bullish market structure and we are clearing those other levels of support and resistance. So we're just waiting for now. Now you could say that there's another area of resistance there. So I would look potentially to start shorting from about the 50 fib or the 6180 fib if we do get those bearish signals starting to appear. Now, if you were to short that from those levels, your price targets are going to be previous swing lows. So target 1, target 2, target 3. Now, I like to keep my targets a little bit above a level of support, because what can happen is sometimes price doesn't actually reach that level of support. It stops short, the buyers come in because they're expecting a bounce and then they shoot price up and you actually miss your take profit. So I like to give it a little bit of room. But yeah, that's looking good. Now this potential rising wedge is invalidated if we start to break above that trend line. So if we start to see price got us, get above that trend line, then we're invalidated. Any divergences? No real divergences at the moment. But this here, this nice weekly hammer there is a nice bullish line off that trend line. We can come down to the daily, see how we're looking, seeing if there's another opportunity. Now you do have yeah, that big bearish divergence here. So I don't know if you can all see that. You had this bearish divergence. Actually, that's more of a horizontal. Just like that. And then you had ascending price. The divergence is now played out. You've got that massive sell-off. Now you can see how we need to wait for multiple confirmations. This is probably a prime example, right? So you've got what potentially could be an evening star here, but it's not at resistance. There's no resistance point that it's rejecting off. So price has actually continued to come up and go above that. So these sorts of formations are more valid when they're at support and resistance, right? So we want to stack up those levels of confirmation as much as possible because it's going to give more it's going to make the trade more valid essentially. Yeah, not really much there on the daily at the moment. You probably could even say that we're going to get a micro rising wedge. And you could even run fibs again. So you could put your fibs up here, come down to the retracement level, look for those areas of confluence. So where do those levels line up? Well, this 6180 here lines up perfectly with our, see this faint blue line here? That's from our weekly support, weekly fib level, which is also the 38.2. So probably a strong level of resistance at this level. But yeah, we'll just wait and see how price reacts. We might not even get up that high. We might reject it in the 50 and then come back down, keeping in mind if price does reject. I don't know about the strength of the zone anymore. I mean, we did dip just below it. So we dip right down below here. But yeah, you could potentially look for a, that could be a bit of a bear pennant. Bear pennant breakout target would take you outside of the pattern. And then we want to see where that lines up with other levels of key interest. Definitely one to look out for. Yeah, so at the moment we're just waiting for confirmation to see what happens. The ideal entry for this particular pattern, the much larger sort of rising channel that we've got here, if we are looking to short it, the ideal entry is we actually want to short top of this trend line, potentially level of confluence where it lines up with the 50, or if we even get a little bit higher, maybe into the 6180 area. But that would be the ideal entry point for me to consider a short. Obviously waiting for those bearish candlestick formations as well. If I'm looking for a long, I want to make sure I'm getting a long off the trend line and off the key level of support as well. For our looking great. We may even get a break at this level. Just a wait and see at the moment. Got a 4-hour level resistance. Yeah, so you got a 4-hour zone there. So if you're going to look to short this micro one, you probably look to enter into a short up here somewhere. Just being mindful of the key levels of support down below. So larger time frame support will potentially halt your trade if we visit those levels. That's all for Matty. Right, Francis is gone for a feed. Lovely. Matty. Dot. Let's have a look at Dot. How's everyone doing so far? We got any questions? Is there anything that I've been saying as I've been going that maybe you guys are a little bit unsure about? Perhaps I haven't explained something quite right. You guys have some more questions? All good? Beautiful. We'll carry on then. Okay, so Matty, I think we actually charted this earlier in the week as well by the look of it. Yep, so we got a nice trend line here. Got a trend line break. We got a nice bullish candle that we're broken out of. We didn't actually come back to retest the trend line. However, we broke above what was previously a level of resistance, which is now support. We came down perfectly and retested that support level. So that zone there. We've got a very nice hammer. And now we're just waiting on that weekly bullish engulfing to see if we get that bullish engulfing close. Now, keep in mind, obviously, you've got to be aware of what Bitcoin's doing and what the dominance is looking like. What I often find is if we do get that morning star closed, as I said previously, I like to wait for a sort of 50% retracement, especially considering that we've got a strong level of resistance up here and we are starting to reject a little bit. That could actually come down. So something I'll be mindful of. Yeah, so I want to pretty much wait for this level here. I want to see how price reacts when we get to this level here on the weekly. And if we start to get a nice bullish candlestick formations on the lower time frames, so maybe the daily or the 4-hour, preferably the daily, we start to get that nice hammer, bullish engulfing, then I'll potentially look to enter into a long position. Because from a weekly standpoint, Dot looks pretty good. We've got break and trend. We've got that higher high and higher low. So higher high, higher low. We're starting to create that bullish candlestick formation. If we do get that confirmation and that candle does close as a bullish engulfing, so you're starting to see strong signals, bullish signals from a weekly standpoint. So yeah, what I'll be doing is I'll be watching that weekly support level there to see how price reacts and potentially get into an entry there, because that'll give us that nice 50% retracement of that candle if it does close as a bullish engulfing, which will allow us to position ourselves potentially for a long. I've just seen your comment. So when you finish with the charts on macro, obviously we see banks failing and trillions coming to not allow the banks to fail. What theoretically would that mean for Bitcoin? Yeah, so with banks failing, people and the money printers being turned on, people are going to lose faith in the dollar as it's going to inflate the dollar heavily, and you'll start to see people start to invest their money more into higher risk assets, not like crypto and things like that, and also gold as well. So something to be aware of. Personally, obviously that stuff's going to have an effect on the market. Personally, I like to look at the charts as well, to add another level of sort of confirmation, because as obviously with banks failing as they have, that's a bit of a black swan event, which is why you can see some of the recent price action that we've had, which was this down shot there. But speaking, like fundamentally speaking, banks is collapsing is good for no one. Even crypto. I've seen a lot of people actually commenting and saying, "Hey," like sort of laughing at the fact that the banks the banks are failing, which isn't a good idea. I don't. I know some of you saw Annie's post and what she had to say about it, which I agree with. Which is basically saying that, you know, this bank's failing. The exact same thing's been happening in crypto, right? Luna dump, FTX. So it's happening all across the board. What was the other one? Shit, I can't remember now. Celsius went under. So you've got all these things. It's like a domino effect, and one affects the other. And we can only, and from my point of view, we can only delay the inevitable. So if they're injecting more cash into the economy and turning the printers back on, they're essentially just delaying the inevitable. But the repercussions of that, why it may be a good short-term solution, it still doesn't solve the problem and essentially sets us up for a much bigger problem, which could lead us to things like hyperinflation, which is not good. Unless you like buying hot dogs with a stack of cash like that big, and then people stop carrying cash altogether. But yeah, that's pretty much my take on everything. How people react to the market, well, yeah, it really just comes back to market sentiment. Quite often you'll see like the big investors and the big institutions and that will position themselves accordingly. So if something is particularly bearish, you'll know about it because they'll send the market in that direction. And you want to follow the smart money, right? Now, a lot of retail won't always necessarily perceive news in the same way as well. So the way that they react to the market could be different. But one thing I noticed, right, with this recent pump that we've had is like the likes of Jeff Bezos and Elon Musk, they haven't actually started filling up their bags and accumulating again. And for the smart money, it's like, well, if this is the start of the bull run, we're ready to go. It's like, well, why haven't they started positioning themselves yet? So something I always sort of keep in the back of my mind is something that a lot of people reiterate as well, is you always follow the smart money, because they're the ones with all the money to throw around. So if they're buying in, then they've got the liquidity to move markets. So it makes sense for retail to position themselves in favor of the move that's coming. Yeah, so DOT's looking pretty good for me, from a long-term standpoint. I would really like to see price actually come back down to this level so I can evaluate. As you can see, it was a weekly support level, but you've got quite quite a big zone there that price can move around in. So although you might start to see candles come back down into here before you get a bounce. But for me personally, I'd just look to stagger my entries accordingly, as long as I'm getting those bullish candlestick formations. I don't like, I know a lot of people will actually like set fib levels or support levels where they actually just set their buy orders and they just wait. And then as soon as price comes down, buy order gets filled and then try and catch a move. That to me is extremely risky. You're expecting something to happen that may not happen, and there's no guarantee that you're going to get a bounce there. You've got a nice 4-hour trend line there. We are at a bit of a resistance level at the moment. Where else? So I'll say about there. Struggling to get above. So what I'm doing is I'm coming back as far as possible to try and see where that level lines up. So the more data I can see, the better. And I want to make sure that I'm accurately placing my resistance line. What am I on the 4-hour? Yeah, wait and see. We could even get something like this, where price trends up, comes up, hits resistance, breaks out of here, retest, and then come back down, get our retracement, and then come up. But that's purely speculative at the moment. Now, one thing I will actually show you guys just quickly, and I don't think I actually covered it earlier in the week. But one thing I like to do when I'm back testing my strategies, right, is utilizing the bar replay. So if you come up to the top of your trading view here, you've got these two little arrows, and that's your bar replay button. Now, what you can do to sort of back test your strategy and test your analysis is come onto the chart and go down to a time frame where there's a lot of information, so that you're not looking at the chart too much. And then what you want to do is you just grab your bar tool and just click somewhere on the screen. And what that's going to do is it's going to remove all the data from the right-hand side up to that point. So from here, now we can start to come in and we can start to actually chart up our assets. So we can go, right, what do we have going on here? So we've got a bit of a zone, a resistance zone that price is broken out of. We're starting to get a break. We've got trend line, potentially, yeah. Got another bit of a, yep, so you got that break, or it looks like price is going to break out. So you might sort of say to yourself, okay, well, here we've got a bit of a setup. What am I waiting for? Okay, price has broken out. I've missed the initial breakout. So what am I doing? I'm waiting for a retest. Price needs to come up, back down, retest, bullish candlestick formations, and then we look for an entry. So what we can do now is we can actually press play and watch the candlesticks unfold. So what do we see here? We had doji, followed by a bullish engulfing because it engulfed the previous candle. So that there, once that candle closed bullish, would have been our signal to buy in. Now look what we had here. We had a wick down. We had a 50% retracement of that candle. So for me, okay, we've got our close on the 1 hour. We've got our bullish candlestick formations, our breakout retest of that previous resistance level. I would have been looking to enter a long position at the 50% retracement. My invalidation point would have been below the previous resistance structure. and possibly even look to stagger my entries so that I can get a better entry point if it does actually start to come down within this channel. Now, as for our targets, well, we want to target previous levels of resistance or support. So we want to target this area here. May need to come back a bit further. No, there's not a lot going on there. So we want to target that level. We also want to target this descending trend line, right? Because that's going to potentially be a level of resistance. Now look what happened here. This here, this zone here, that's where we're expecting resistance. You can actually draw it as, instead of a line, draw it as a zone. That was our potential take profit because that's where a previous level of support was broken. So you can see here, previously it was support, support under here, support again, but then we broke through, okay? And we haven't actually come back to retest that as resistance yet. So for us, that would have been our target for this move here. And look what happened. Price come up, hit our target. It would have been a nice 5-to-1 trade. Makes sense? It would have been a very, very good trade, that one. Now, for me personally, I mean, this is only the 1 hour time frame. From a long-term standpoint, if I was looking at the long-term trend, I would have been seeing this because I would have started on the weekly time frame. I would have saw that this candle here, this weekly candle, had actually closed as a bullish reversal pattern. So that to me would have been enough to indicate on my entry down here to potentially that could be a swing position. So I've got a very, very good entry here. Potentially I could hold on to this and it could be a good swing position. Keeping in mind, we could come all the way back down after rejecting here and start to retest this trend line again. So what we want to do is we want to manage our position. So at the very least, what I want to do is I want to actually move my stop loss up to where my entry was. You can see we've got our break there. So potentially you'll trade if you're aiming for there. Massive profit to be made. That's how I look for swing positions, right? And that's why I started on the weekly. You see the trend line there forming. We see the indecision candle. We come down the time frames. We go down to the lower time frames. We would have looked at that, seen that breakout opportunity presenting itself. Know to target this level here, next resistance, and we bring our stop loss up as price clears that level. So once price actually breakout retest of this trend line here, I want to start making sure that I'm moving my stop loss up as well. So my stop loss would be inside the pattern, inside the trend line, below the support area. And then as price trends up, I can just start bringing my stop loss up behind. Bring it up, and just let it run. Because if you're seeing a reversal like that starting to form on the weekly, then that whole asset could just absolutely come back and start smashing these highs. Now, if that's the case, it's going to take a very, very long time for it to actually reach these levels because it is the weekly time frame. So one thing you will need to consider is fees. Fees on a leverage position, because you're going to pay leverage fees. You're going to pay your standard trading fees, all of that sort of stuff, and it's going to start to stack up. And as your P&L goes up, so does the amount of fees that you're going to have to pay. So that's something to be aware of when you're holding long-term swing positions. Just be aware of what the fees are, and the fees will be subtracted from your margin for that trade. So as your fees are deducted from your margin, your liquidation price is going to start to come up as well. So that's something you need to be aware of. But yeah, that's one strategy that you can use with that bar replay tool to start backtesting your strategy and practice entering and exit trades. Just come back to a random point on the chart, click anywhere, try not to take in too much of the data and get an idea as to what direction it's going to go, because that's going to give you a bias to go off. So try to sort of just click anywhere without looking at the chart too much. And then, yeah, find those opportunities. Go through. Look for those confirmations. Go through your trade plan. Okay, have I met all the conditions of my trade plan to enter the trade? Yes, I have. Put your long and short tool in there, how you would take the trade, where your stop loss is going to be, where your take profit is going to be, yada, yada, yada. And then, yeah, press the play button and see how it plays out. Now, if it doesn't play out the way that you're expecting, go back and review it, analyze it. Okay, well, why did it go this way and not the way that I intended? So you can actually start critiquing your own analysis as well. But yeah, that's how I backtest my strategies and practice my entry points. Now you can speed these up as well. You can speed it all the way up to 10 times so it runs a bit faster. But yeah, you can see if we kept that swing position and we got an entry down here, far out, man, that was a very ideal entry position. Now, some people actually prefer to, because obviously it's a long-term trade, some people might actually start taking profits. They would have taken profits up here and actually just waited for price to retrace to look to buy back in again and then catch the next long. It's completely up to you, depending on your strategy. What else have we got? Dot or link? We've got link. What's our time looking like? Cool. We can we've got about another 20 minutes, so we can run through link. Has anyone thought of any questions while I've been smashing these charts out? Cool. Link. Now I think from memory, Sammy already posted a chart on this. So what we can actually see here is we've got a bit of a consolidation zone. So we're consolidating in this range at the moment. The weekly time frame. Now, that means that whichever direction this break, that move is going to be pretty explosive. So during this period, there's some accumulation happening. Whether that's for a short or a long, we don't know yet. So we need to wait for confirmation. Ideal entry, if we are going to look for a long, we want to be entering within the bottom of this range somewhere. Because we long at support, we short at resistance. Also, we want to start to look at change of market structure within this channel. So we want to start to see higher highs, higher lows. Not like that. Higher highs, higher lows. Does that change of market structure, maybe following a bit of a trend as well, could be a precursor to a potential breakout about to happen. So those change of market structures are going to give us a little bit of insight Also, with that, looking for things like divergences, bullish or bearish divergences. Now, what you can actually do, middle line. So we're actually testing the middle line of this channel right now. So you can see we've got another little resistance level that lines up here. We've got support there. And yes, I think it's set on resistance. It will also support there. So I'll potentially be looking for either a rejection at this zone or a breakout, retest, maybe get along there. What would a long shit, that's pretty big. It's a pretty big move. It's a decent sized channel. You're sure to be about the same. Weekly. On down to the daily, see what we've got. Wonder if we can get a trend line on there. So that trend line there is valid until it's not, right? We've got 2 touches on it. It's valid until otherwise invalidated. So what could happen is you could maybe get something like this. Price build up. If we do start to see like something along those lines, a little bit of an ascending triangle type situation, then I would potentially be looking for a breakout retest and then catch along. Just keeping in mind you've got resistance there, got resistance there, yeah. Vice versa, if we do start to get something like this where we trend through and we reject, breakout, retest, short back down, you're going to get support there and support there. Oops. Looking like on here. Yeah, not really showing much going on. Maybe a little bit of a I really like that trend line. Maybe take it from there. Yeah. I mean, technically that's a valid trend line, but I don't like it ideally. Put some fibs on there, see what we've got. Go from the top to the lower wick. So see where that center line that we put in, see where that lines up. So like I was talking about levels of confluence, right? So your 50 fib level lines up with that middle line that I put in. Now, just so you guys are aware, that channel that I did is the parallel lines tool, or the parallel channel, sorry. You can double click on it and you can add those middle lines in. But yeah, that's a good level of confluence because we already established that that dotted line actually made sense as a line of resistance. And now that also lines up with the 50. So you can see price is already reject there. So we can potentially look to see if price is going to reverse. If it does, you might be able to catch a little bit of a scalping short. Well, not so much a scalp because it's the daily. See what the move would be. Yeah, you'd be about a 12% move, maybe less as if price takes longer. If you do get a short, I would be targeting obviously that level there first and then that level there second. Keeping in mind you've got support on the trend line, which is valid until invalidated. We can actually come back down to the 4 hour to see if this trend line actually looks a bit better. It's not too bad. So yeah, right now we're just waiting to see how price reacts. If we start to get a rejection off this 50 again, get those bearish candlestick formations, you could wait. Personally, I would wait for a breakout retest, and then potentially to short down if that is a bit of a rising wedge. Keeping in mind that pattern is invalidated if we close above that trend line. We are still creating higher highs and higher lows. But if we start to see that we come up and produce a lower high, then that could be a precursor that we're going to start retracing. So keep an eye on that. Also look for divergences. Yeah, you've got a bit of bearish divergence there, but it might have already played out on that move. Yeah, so dot looking interesting. Another weight scenario. Now, if you wanted to put an alert, say for example, if you were looking for a long on this, if you wanted to put an alert, you just put in a horizontal line, and then double click, right click on it, go add alert, and then you go crossing up once per bar close, because you want the time frame that you're trading on, you want to see that candle actually close outside. Because we're on the 4 hour, you could even come all the way down to the 1 hour. Say you want to get a 1 hour close above there. Before you look at potentially going long, obviously keeping in mind you've got that trend line there that might act as resistance. But if you do get a close above that retest, you can set an alert for that eventuality once per bar close, crossing up, and yeah, and then you just say link, look for long. Now that there looks like it might be forming a bit of an ascending triangle. So if you treat that line as a zone, accounting for the wicks, you account for there, you could almost say, actually, you might even have a bit of a head and shoulders. Reverse head and shoulders. Yeah, that's valid. Right shoulder, head. Left shoulder, head, right shoulder. Right shoulder is higher than the left shoulder, which is what we want. Got your neckline. Looking for that break, retest. A breakout retest of here would actually take you above our 50 fib level and also our middle for our parallel channel as well. So then you'd act as a good level of confluence. And then the breakout target for the head and shoulders is the length of the head to the neckline from the point of breakout. And then pretty much, neckline is, that'd pretty much take you to the top of that. Just be mindful, you've potentially got resistance on this line here. We've also got the 6180 here. You can also draw a trend line like that. It could be a bit of a ascending triangle starting to form. If that head and shoulders does invalidate, you can get something like this. There go breakout, retest, push up. But yeah, just waiting for confirmation now. Cool. I can do one more. We can do one more. Any other coins, or should I just pick one? Soul or Gala? Soul. Weekly. So your weekly. Resistance. A little bit of a support zone there. Command. Trend line. See if there's any trend lines that we can line up. Maybe say that that's the trend line there. 2 touches. Ideally, I like to see 3, but for argument's sake, we can just have those 2. Now, what else? So I'll just point out that same thing on the weekly. We had that nice hammer. So particularly bullish, but what we want to see to confirm that is we actually want to see that bullish engulfing. So that bullish engulfing has to close within sort of 60%, 50 at a minimum, 50 to 60% of this red candle here to be considered that morning star. But we've got about 15 hours to go before that candle closes, so we're just reviewing now. Waiting on the sidelines to see what happens. Now, potentially, you've got that same rising wedge pattern starting to form. We can chuck our probe level on there as well to get our retracement levels. Yep, right off the 6180. So we've whipped right down there, and we've got an inverted hammer. Particularly bearish. You've also got you had a big bearish divergence there, which is played out in the daily. So what else have we got here? Yeah, that looks a bit better, that sort of rising wedge. This is a classic bump and run here on the trend line. We've got price just sitting on the trend line and then it pushes up. Now, at first glance, you might think that this is a bit of a bull flag, but you can actually come down to the lower time frames to sort of see how it looks to actually determine whether or not it is. Yep, could potentially be a bull flag. If it is, your break would take you to the top of that trend line. So if we do get a breakout here on this little bull flag or bull pennant forming, whatever you want to call it, if we do get that breakout, then potentially be aware that you're going to run into resistance at this level and at the 6180, which was the previous high. So I would be waiting to see if we do get that breakout. Because we are sort of forming this rising wedge pattern, the obvious choice would be to trade with the trend, and we are trending upwards. So you could potentially take a long there if you're going to scalp, which would be, you want to break out retest, you'd probably 4% move. I'd be targeting the 6180, that move. So you're looking at a 4% move, maybe a 40%, but just be aware that you may run into resistance at that 6180 and at that trend line. And if you do start to reject and you start to see those bearish candlestick formations, then I'd potentially look to either close that long, or if you're not in a position, actually look to short it. Because with these rising wedge patterns, the ideal entry usually sits at around about the 6180 level, I've found. And if we do actually come up and hit that trend line and create that higher high, have a look at the RSI to see if we create bearish divergence as well, because that could be another confirmation for you, and then potentially look to go short. But yeah, at the moment, if you look at it from a daily perspective, we have created a lower low. So now we could potentially just be coming up to create the lower high before we continue back down. But yeah, that's sold. So there's a few opportunities in the market that are presenting themselves. A few good trade opportunities there. Keep in mind you want to be mindful of what Bitcoin's doing. You also want to look at the Bitcoin pairing for whatever altcoin that you're trading as well. Expect come Thursday volatility in the market because the FOMC meeting is coming up. So we could be in for a very, very volatile week. Before we cut it there, has anyone got any more questions? Feel free to unmute yourself or post in the chat if you guys have got any questions. Cool. Well, any feedback from tonight, guys? How did you find the market scan?
That was
Any
good,
feedback?
man.
Oh, that's good.
Pretty thorough. You went through a lot of things that just little tidbits of information I found useful. That playback thing is pretty cool.
The way you break it down too is really good.
Awesome. Yeah, getting feedback's good for me because it sort of helps me out, right? So that I can sort of come back next time and if necessary change the way that I do things to try and improve and deliver you guys a bit more value on the calls as well. But yeah, thanks very much to all of you who made it on, and glad you guys found some value out of it. So basically from here, just stay tuned and we'll update when the next Zoom call is going to be.
Thanks for your time. Appreciate it, mate.
Cool. Thanks for jumping on.